Hey guys, what's up, what's going? My name is Robin. Welcome back once again to yet another weekly update on the Wealth Simple Trade dividend stock portfolio. We are on week number 70, and we've been doing this for quite a while, but hopefully these updates have been helping you guys out, and I've been loving doing them, and we've been having a lot of fun. So inside today's video, if you guys are brand new to the channel, this is basically a thing where I give you guys an update on how we built a dividend-based portfolio that's primarily based on the Canadian stocks completely from scratch. So once again, the goal is to kind of show you guys how easy it is for beginners to kind of get started and how you can invest in a very simple sense and get some pretty good results, as our portfolio has been growing steadily since we started investing just over a year ago. We're on month number 16, I do believe. So the portfolio is slowly growing over time. And like usual, guys, the layout of the video will be pretty simple. The first thing we're going to do is to give you guys a quick little update on the portfolio. We'll go over how the stocks have been performing over the past week, the past couple months, and then I'll show you guys my all-time return. And then I'm going to jump inside the portfolio and give you guys an update on some of the stocks that I hold. And then I'll be buying some stocks today. I'll show you guys what kind of stocks I'm going to be buying and some plans for the future. And then I'll give you guys an update on the dividend income so you guys can see how much money the portfolio has basically made us over the past couple months and since we first started investing and building the portfolio. So like usual, before we get into the big meat of the video, if you guys enjoy the content, be sure to give it a big thumbs up. It really helps the channel out when you guys do that. And if you guys want to follow alongside and get notifications when these videos do go live, be sure to subscribe to the channel. And if you guys want to support the channel, I'll put my affiliate links to Wealth Simple Trade and all that kind of stuff in the description of this video. Alright guys, let's jump in and let's see how our stocks are doing today. Alright guys, so the first thing we're going to do here is I'll show you guys the app. We'll go over the performance of the portfolio and I'll show you guys how my stocks have been basically doing over the last little while here, and then we'll jump inside the portfolio and I'll give you guys an update on the holdings and whatnot, and then we'll show you guys what stocks I'm actually buying today and some future plans for the portfolio. So first thing up here, we have a portfolio of $28,000. I don't know why I said 2,000. $28,000, almost $29,000, and our TFSA is vastly approaching its limit here. So once our TFSA maxes out here, we're gonna have to make it a personal account, which will probably be pretty soon. And then I'm gonna have to, but I'll probably just mostly buy the same stocks. But I'm definitely looking to add some new positions and just kind of, maybe add some different stocks as we go into the personal account. But we're gonna kind of get there eventually over the next couple weeks. But the portfolio is basically over the past day is up 0.13%, which is about $40 since this morning. Since the market opened up over the past week, we are currently up about 1.1%, which is $300. Over the past month, we were up $800, which is 2.87%. And then over the past 3 months, we're up $2,290, which is 9% in the past 3 months. Lots of good gains coming in our portfolio over the past year or so. And then one year, like I just mentioned, is up 14%. 14% gain over the past year, I think, is really good, especially for like these long-term, good, solid dividend stocks that are constantly growing, constantly increasing their yields. For a portfolio that's not super growth-based, and it's funny when people mention that, people will say dividend stocks don't have a lot of growth. Well, it depends on what stocks you're buying. Our stocks are very growth-focused and dividend-focused. So you guys can see here, we have 14% gain in the past year. Obviously, there's been a pandemic and whatnot, and stocks are kind of recovering, but still lots of growth coming nonetheless. And if we go all time, we can see the portfolio is currently up about that 13%. So once again, year by year performance is up 14%, give or take. And again, a lot of those dividends are still rolling in on a regular basis. Alright, so just a quick little update on our portfolio and holdings. Now I'll show you guys some of the stocks I've been kind of looking at over the past week or so. So I've once again been kind of focusing on the ETFs just to kind of get them up to the levels I want before we kind of move away from the TFSA. But here's the stocks I've kind of been an eye out looking for and whatnot. And a lot of people, on YouTube, especially myself, have been focusing on, stocks like Algonquin Pound Utilities. This stock took a big hit over the past little while. It's slowly starting to get a little bit of recovery, but still down quite a bit. Really good growth-based stock, really good dividend yield. So Algonquin Pound Utilities has been one I've been buying on a regular basis. You can see I bought some alimentation couche-tard over the past couple days. That one's been doing pretty good. That's been a new stock ran inside our portfolio, and I might buy a couple shares today just to kind of bring it up since we only own 2 shares. But nonetheless, a lot of these stocks are starting to recover and do pretty good. Our REITs are doing pretty good as well. Manulife is up 24%. I don't think I'm going to be adding any more Manulife for now. The REITs are pretty good. We have quite a bit of REITs, and they're doing pretty good at getting that regular income. We have the good ones like TD and whatnot have been performing really good. TELUS is doing okay. Shaw Communications is up 41%. Well, we're not going to be buying any more of that for sure. And then going down here, we have some ETFs. So I probably will eventually at some point sell XRE, which is a REIT-based ETF, and then put it into the individual REITs. And I probably will sell VYMI, which is a US-based fund, or international based fund, I should say, that's paid in USD, which I don't want to really have inside the portfolio, and kind of just stick that money into VFV. I think is going to be the goal. But we can see VFV actually went up quite a bit over the past little while. It's up 7%. Which is actually quite a bit of gain over the past week or so. It must have went up quite a bit. So up 2% in the past week and up 5% in the past month. So the U.S. stock market is starting to recover, and it's just a good ETF to hold. And I definitely will be focusing on ETFs. So today the main focus is going to be VDY and VFV. So I'm going to be buying one share of VFV here. We'll buy one share here. We'll stick that inside the portfolio. It's going to be about $100. We'll put that through, and then I'm probably going to buy about a share or two of VDY, and then whatever we have left over, I will stick into Alimentation Couche-Tard to kind of balance out the portfolio from there. So we'll go back down here, we'll go to VDY, and I'll buy about let's buy about one share of VDY. We currently hold, I'll show you guys a little allocation graph here towards the end of the video, but we currently have about 27% of VDY, so I definitely will be adding more as time goes on. Let's put about $75 of VDY to once again bring it back up, and then the last little bit we have, I'll put into Alimentation Couche-Tard, because this is a really solid growth-based dividend stock that has a relatively low dividend yield right now, but over time the stock is going to grow. It's got a super high dividend growth rate. It's got good growth, and I think over time, like, this is kind of one of those stocks that I think is currently in their growth, their big booming phase, and then over the next 5 to 10 years, this is going to be like another like TD or something kind of based stock. They're just going to have really solid returns, I think, over the next couple of years. So I think this is a steal of a deal. It's currently priced at $41 Canadian, so it's not super cheap, but I still think over time it will grow. So you have $64 inside the portfolio, so buy one share of that, and that'll kind of help bring it up just a little bit, and we'll put that through. And I think that'll be good for most of the stocks that we're buying today. We'll be left with a little bit of money, but I'm just going to hold that for now. And let's take a quick peek at the sector allocation of this portfolio, so you guys can see like actually how everything's kind of organized and whatnot. You guys can get a better visual representation of our stock portfolio. So once again, if you go over to Track Your Dividends, which is the basic website I've been using to kind of control basically track my portfolio and kind of just keep track of everything and show you guys like this little quick easy ways to see things. I know a lot of people have been using spreadsheets, and I might grab one. I did have one for a little while, but I'm not really good with making like super high quality spreadsheets, so I might grab one and kind of make some simple adjustments. I see a lot of people doing them on their channels, so let me know if you guys want that. I might kind of pick one up and kind of do some basic editing, and I can show you guys in my videos. But here's a quick little graph you guys can see here. So you can see we have about 57% of our portfolio in VDY and VFV, which is our main ETFs, and then we have financials as 13%, we have real estate as 14%, and then our other one is utilities, and then we have communication services, which would be like TELUS or Shaw, and then we have industrials, which is our Brookfield stock, which is I just wanted to add a little bit of diversification in there. So pretty much we kind of got a little bit of everything. It's not super diversified, but again, VFV and VDY add a lot of diversification because a lot of it comes from the US stocks, while the Canadian ones are more focused on the energy and the finances and whatnot. The US stock is more focused on a lot of those other ones. And if we go stock diversification, we can once again see the different holdings inside the portfolio. So our biggest holding is VFV and VDY, both at about 30% each. I kind of wanted to get them to 30% each, but it doesn't really matter. It's not going to be perfect over time. But we have that. Then we have TD at 9%. We have MFC, which is Manulife, at 4%. We have RealCan at 7%. So again, the REITs are pretty big inside the portfolio. I don't think I want to buy any more. And I probably won't be buying REITs in a personal account because you do get taxed and whatnot. And HNRE is at 6%. So we have I would say about around that 10-11% in REITs. So I'm pretty comfortable with that. I'll probably hold that and keep that there. And then we have some of our individual stocks here, which are just small little holdings here that I've built up over time. So once again, I hope that kind of helps you guys. Over time, I will get a better spreadsheet so you guys can see this in better visual representation. But I just want to give you guys a quick little update on that. And last but not least, we have our dividend income. So once again, if you guys notice, I like to keep things simple. I'm not a super technical investor. My spreadsheets aren't like as super advanced as everybody else, but I've been thinking about making these public where you guys can kind of see my growth and whatnot. So basically what I do is I take my spreadsheets and I put them on Google online, and then you guys can download a copy. And it's not so much to kind of create your own. I mean, you could if you want, but it's more if you guys just want to see how my investments have been doing. So that's something I might look into doing, and maybe next week, if we hit a goal or something on the channel, I'll get that so you guys can actually, kind of download the spreadsheets and just kind of take a peek in my portfolio, see how the dividends have been and whatnot if you guys want. That's something I definitely will be considering in the future. So let me know in the comments if you guys want to see that. But here's basically the dividend income breakdown over the past couple months since we started the portfolio. You guys can see it started off really small, but it's been growing pretty solidly. And in April, we're currently sitting at $70 in dividend income. So that's pretty solid. April of last year was month 4 of the portfolio. We made $7.50. Fast forward entire year. I've been saving aggressively and putting as much money as I can inside the portfolio. So 1 year later, we're making $70. That's a huge increase. So yeah, that's pretty cool. I'm pretty happy with that. The portfolio and the investments have just been doing really good. The monthly dividend income, like I said, is about $70, and then our total dividends, if we add up all our months together, is sitting about $500. So that doesn't seem very impressive, but that will start to pick up, as you guys can see, if we're making about $50 to $100 per month, give or take, over the next couple months. It will continue to grow. And here's a quick little view of the different dividends that I got from the different stocks inside the portfolio. As you guys can see here, our ETFs are obviously going to give us the biggest yield on a regular basis, and both of our 2 big ETFs, VDY and VFE, gave us a dividend this month so far. And the funny thing is, we're just starting the month, so there's still a couple dividends will trickle in, and I think some of our bigger stocks like TD will pay a dividend either at the end of this month or at the beginning of next month. I can't remember. So we should see some pretty good payments on a regular basis, and we still have a lot of little individual payments that will slowly build up. So we might hit like $70 to $80, maybe a little bit more by the end of the month. I haven't really looked yet. But it's been pretty good so far. So once again, VDY giving us our biggest dividend payment of $30, RioCan $8, Spheria Corp 84 cents, H&R REIT $7, VFE $21, and TELUS $2.80. So once again, the ETFs obviously make up the biggest chunk, but these little stocks do add up at the end of the day, as you guys can see. And the 2 REITs, are just giving us that regular monthly income flow to help reinvest back in the portfolio and get those dividends going. Alright guys, so that's it for today's video. So like usual, let me know what you guys think in the comment section. Over the next couple days, I will be doing that video I promised you guys last week, where I showed you guys, I told you guys that I would do, if we hit 150 likes on last week's video, that I would do a video where I show you guys how to make some pretty cheap, budget healthy meals. So that video will be coming up over the next couple days most likely, so stay tuned for that. I will do that video. I've just been a little bit busy lately, so we'll definitely get that done. But other than that, guys, I hope you guys enjoyed the video, and like I said earlier, be sure to subscribe and like the video if you enjoyed it. So anyway guys, take care, have yourself a good day, and I'll see you guys later.